Hey there, everyone. Welcome to our second last episode of Bulls versus Bears for 2025. Jonathan, welcome.
Hello, everybody. Nice to be back after on the boat last week. And it's not great sailing weather though. So Kai's out on his boat today. But yeah, wet
Well, we
wet
did
day here in Sydney.
we did have to bring in like an expert witness to explain quantum computing
That's
and
it.
TPUs versus GPUs. As much as I would like to say that we got a full understanding of it. We really we really don't. We're not the experts. Let's just say that for on that topic. And I've got to say, I wouldn't say I'm still confused, but I understand definitely. I understand more of it, but it certainly is. It's an interesting topic, and it sort of does feature in our outlook for this year, but still pretty speculative. But I mean, I tell you what, when they actually get that stuff working, oh my lord, it'll be a good day if you're holding on to them.
Saying, oh well, just on an aside on that is that that's actually one of the theories on why Bitcoin is so weak because they're saying that if quantum computing does come about, they'll be able to crack encryption. That's just a theory I heard and thought it would tie in with the lax Bitcoin price movement, even though it is above 91 now. But with the rise of quantum as well. So
which is a beautiful segue to who needs either of them when you've got silver.
exactly right.
Just up a lazy 115% for 2025. Team Silver just hasn't taken the lead. It's certainly gapped Team Gold at 65%. We do have that later down in the show. A couple of comparisons for sectors and stuff like that. But
but just on the silver move, like what's been amazing for me is that I think it's moved something like 25% in 2 weeks. So I haven't seen anything like this. And you look at the intraday price action, and it's just like wow, that's there was an actual gap. I mean, like obviously the December contract. If you look at the futures on COMEX, that's not the front month contract now, and the volumes are quite low. But it actually gapped up and then sort of closed at the high. So there's a few shorts getting squeezed still in that one.
Yeah, well, and one of my favourite silver rumours that's been floating around since 2011 is that JP Morgan has been ultra short silver to the absolute eyeballs. And the rumor now is that they've actually they got out and they're long. So I don't believe either of those rumors. I just think people really like to speculate around things that they can't possibly end up finding out as to justify their positions. But if that's the reason you've got it on,
the thing is that's you don't want to let facts get in the way of a good story. That's
exactly right. That's exactly right. And 2025. Investing in 2025. I think that's almost the moral of the story. Just don't let bad news get in the way of of our rally. We're having it anyway, so just shut up. Basically, take your fundamentals and take your maths, and just we'll chat about it next year, or if someone blows up. So,
but just on stories though.
Maths.
Yeah, that's true. But just on stories, the other story I heard was that JP Morgan actually switched their gold trading desk to Singapore as well.
Oh no, that happened.
Oh, that did happen?
Yeah.
Well, then that's just a good story backed by facts then as well. So every time you saw some sort of price action in Asia, it's like, oh, that's JP Morgan again, trying to keep the prices down.
Yeah, I mean, they've announced it. I don't know whether it's happened yet, but yes, they're usually they may be stretching the reality of those facts into a story. But the easy one there is the Chinese are still buying.
Yeah.
Which they've been quite publicly saying they have. So, but look, equities this week really. I just skip basically bullish everywhere. Mixed everywhere except the US, which got a rate cut they knew they were going to get. And S&P eked out a record high, but driven by the rest of the market, not the. And I'll go to the US first. You can see here the weekly, like it wasn't the Mag 7 that dragged it up. I mean, Broadcom was up, and then added a little bit more in the aftermarket on earnings this week. But the Mag 7 realistically, was very much pinned down by Oracle's result. And even some bearish people have rushed to the defence of Oracle, which is quite bewildering. I've got to say. A couple of guys on Twitter who have been calling the AI bubble for about 11 months straight now. We're actually going, oh no, but they're just doing infrastructure spending, like it's okay, which is just so out of character. But Oracle's earnings, they missed on, or they smashed it on EPS, but missed on revenue. Upgraded their outlook and then fell 12%. So.
So it's back to it's well below where it was when it got that re-rate. On that news with that OpenAI as well.
15% below there.
Yeah, exactly. So quite a huge move and extremely volatile. So Larry Ellison's probably only top 10 richest in the world. So poor guy. Was he number one at one stage after that move? Or?
No, well, they say history, repeats. He was. I think the same thing happened in the .com bubble. He was like the richest man in the world for like a day, and in '01, and then he's just been making it back. And then literally same things happen again this time around, and. Like I joked about that on the morning call podcast and just going, this happened in '01. It only lasts a couple of days. And then literally that was the peak. And it was not I was just being a smartass. I actually didn't mean it because we've got Oracle in one of our structured products, which was going extraordinarily well there for a while. But there's still a couple of years to run on that one. And I'm sure, there will be some form of bounce back. But and look, Google coming off about 3% this week. It's had an incredible run. I think it's now the best of the Mag 7 this year. And I did a little bit of a look into the top performers of the S&P 500 this year, and there's a fair few industrials, a couple of financials, a bunch of defence stocks. There was some materials in there in the top 50. Tech was still the the biggest one, but it was very much it wasn't dominated by tech, and the Mag 7 was, I think Google was way down the list. Certainly wasn't top 20, and maybe we'll do a bit of a year in review next week for the podcast to wrap things up, and we might go through some of those best and worst performers, because I didn't really have enough time to bring them around to get them all organised and make them look pretty for the podcast. But yeah, materials are back, baby.
In a big
BHP
way.
at 46. Even NAB's had a rally this week, but again, who really cares? But where we're, the big boys here are starting to make a pretty significant comeback. I think the materials sector, one of the best performing, if not the best performing, and then the banks are only largely flat. So, that's kind of where our index is probably it's down a couple of % for the year. While we've had that big lift up in the materials sector and the gold sector, etc., it's been balanced out by the banks falling away a little bit. So, but they were at pretty extreme levels.
Yeah, but it just shows as well that this is like one of those sports games where it's a tale of two halves. Basically, in the first half of the year, it was the banks. The CBA I think it got up to 195 or thereabouts, just to shade under 200, and it looked like it wasn't going to stop. And then about halfway through the year, you switch. So everyone's just decided that the banks are too expensive. They started rolling out, and now it's starting to hit the commodity side. So So now finally BHP and Rio are starting to take off. Like they haven't, taken off like a Mag 7 stock, but it's been a nice steady move from here. So yeah, so
Well, mate, Newmont's done better than all the Mag 7 by
oh,
about 30 or 40%.
yeah, exactly. So
So,
yeah, that's the space to be in. And if you just have a look at, I might have talked to a few of my clients recently that have a look at the bond yields. So what that means is the cost of funding, cost of money is on the rise, and it looks like it's happening worldwide. It just means that the rotation of value should continue from here. So
yeah, I mean the Russell just flicked over the S&P this overnight. So slightly better performance than the S&P, which means lower rates helps that. But the weird thing is that we usually do well when the Russell does well, and I mean this tech sector here is, I just can't get my head around. The Nasdaq being up 25% plus or whatever it is for the year, something ridiculous. And our tech sector is actually the second or third worst performing sector on the ASX this year.
And if you have a look at the charts, it doesn't look like it's stopping anytime soon. So I guess no one wants Australian tech, and that money must be flowing to US tech. It could just be going to the small cap tech that's listed on the Russell as well. But no love for the tech names here in Australia.
I was actually, as you were saying, the tale of two halves. I did the call with Adam Dawes today, and he said, the materials are going to catch up and blah, 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 blah. The banks have been the story of 2025. And I corrected him and said, well, actually, the banks are up financials are up 4%, materials are up like 20. And he goes, oh, okay, I'll stand corrected. And I said, and I just cheekily said, mate, that's so 2024. What are you talking about? But it did switch around, and that we did make that call very early on in the year, and that was one of the calls I did for SBS when I did the New Year's Eve episode of the news or Ricardo's podcast was expected that to flick back around, and it has sort of come good, and look, the banks haven't done badly. I mean, they're just I think shareholders just got a little bit silly, to be brutally honest. But it's interesting that the sort of comeback that lithium's had as well, and with all these critical minerals. But I mean, they're starting to see some value now. One stock which I was extraordinarily surprised about when I did the call today was Premier Investments, which is retail, and I prefaced it by I wanted to hate that stock, and I was like, that'll be a sell. It's retail. We don't want to own that. And then I looked at the sum of their parts and just went, oh my God, this thing's trading at like net tangible assets. And there is starting to look like some serious bargains. I mean, it's quality operator in Solomon Lew, and, I think they've done some good things. So, there's some value around that, that I think people are just, making very vast assumptions on and going, oh, rates are going to be higher. Well, rates are higher because people are spending money in shops. Like, why is a retailer, one of the best run retailers in Australia, down 50% for the year? But JT, run us through this your photos here.
Oh, but just before you move on to that, I actually just had a look at the JB Hi-Fi chart. So obviously that's one of our best retailers here, and I think it's down 20% over the last couple of months. So yeah, obviously the stock market's telling us different things to what the the RBA is seeing. So
like I said, it hasn't been the year for maths or fundamentals or whatever. It's just like it. You may as well be running a Twitter scraper than having someone actually look into the annual reports now.
Exactly.
Because it doesn't seem to make sense.
So I was invited to the Beta Shares Christmas party yesterday here in Sydney. They're on, I think, the 46th floor of the Salesforce building. So fantastic views of the harbour and the fit out. And I'd hate to think what they're paying for that office space, but it is immaculate. And you can see why. Have a look at so I was there. I always keep an eye on the amount of money flowing into the markets as a sort of a gauge. The ASX actually releases that data on a monthly basis. And what you can see is kind of like a nice steady trending chart. Basically, money keeps flowing in. And while it keeps doing that, it's very hard for me to see a meaningful continued sell-off. So you need to see kind of at least the flows to level off or start to decrease before I'll be like, okay, there are a lot of people selling here. So obviously I won't catch the absolute top if I'm looking at monthly data, but yeah, like it's just very hard to fight the money flow. And so these three slides are what I took off the short presentation they had there. Sorry about the angle. I was just off to the side, but I'm like, oh, that's a good piece of data. It basically just shows the amount of money flowing into each share. So the top left, you might have to zoom in, but basically 1.9 billion went into the ASX ETF. You can see the numbers there. They had top date year flows. So there's a few younger ETFs, and they've had double the amount of flows that from the previous year. And then on the second chart, on the last chart there, Beta Shares is absolutely kicking it out of the park. They're only behind Van Eck in terms of fund inflows, and they're well ahead of, say, Global X, which is one of their competitors. So I think they had 12 billion of inflows. I can't zoom in here. I can't see the exact number. But I think it was like Van Eck had, say, 16 billion of inflows, Beta Shares had 12 billion, and Global X was a shade under 3 billion of inflows. And as I said, this is publicly available data. It's not like this was a secret society party, but it just shows that, the amount of money keep flowing in. And I keep often telling my clients, structurally, this stock market is designed to go higher. Because of the fund, the mandatory superannuation. So every time someone gets paid a salary, 12% of that goes into super. That has to go somewhere. Most of it goes into the stock market. So that's my reason, and not say I agree with it or it makes sense, but if money's going in, stock market should go higher. Or as the crypto guys say, number go up. So that's my little excursion into the Beta Shares party yesterday.
I think these guys and the inflows here are symptomatic of how lazy the industry is now. Financial planners not wanting to go the extra mile and actually stock pick. And it's essentially now caused a critical mass of there's no mid-cap fund managers anymore. Mm-hmm. And these guys, these guys are basically responsible for sucking the life out of the Australian market. And that's why we trade more US stocks now, because these guys have turned the market into absolute rubbish. There's no point stock picking anymore. Essentially, because you can't fight. So then all the money just gets great. Like we get a situation where like CBA going to $200, which it never should have done. Now it's come back, and everyone's going, "Oh, why has it come back? Well, why was it there in the first place?" And this is just, this sort of zombie allocation is the reason that people have stopped being involved in that mid-tier part of the Aussie market. And look, I don't really necessarily see it changing anytime soon. And the whole system is basically set up for more fun. The superannuation's crept up as well. And all planners want is more management fees. So they don't really care where it goes. But that's, look, it creates great opportunities for us. It just means a lot of the time you're having to sit there and possibly, well, you're getting opportunities you wouldn't normally get, but when you've got to wait for momentum to turn around quite often in some of these mid-cap names now.
Yeah, absolutely. And then one thing I've noticed is that it just means that there's a lot more, and we see consolidation. So there's been a lot of private capital or private equity buying into some of these listed names at what they think is cheap multiples.
Because it's not what they think is. They definitely are cheap multiples, and they're like, well, if you idiots won't buy it, we will.
Exactly. So because the beta shares don't value companies on traditional metrics, it's just basically how big are you? You get that amount of money into because that's how much we got chasing the index, and a lot of these mid cap names which have been gobbled up. That's why they get so cheap. And as you said, it does create opportunities for people that know what they're doing.
Yeah, look, I just think there's going to be more and more takeovers in Australia because the private equity area of the market will just find it too irresistible. Like, I mean, and companies like JLG this year just going, you know what, I've had enough of your crap, basically, and they sort out a private buyer because the analysts can't be bothered doing any analysis on the company, and they get downgraded for completely flagged or false, or they're copying each other's, anecdotal homework. I mean, it gets pretty grim. But I mean, like I said, the great thing is now you've got access to global markets, so you're not just stuck here anymore. Whereby when you can pick your opportunities in the Aussie market when they come along, and then when they don't, and when they don't, you just look abroad. It's the joy of global markets these days. So, I mean, you would normally get bullied into maybe buying WiseTech or Technology One and paying that premium or whatever because you need to have some tech on. And that's the only tech. I think that's maybe you're right. Maybe that's the reason why they've drifted off this year is because people are more and more getting more and more access to those global markets. So yeah, we move on now to what's going to be obviously my favourite topic of this entire podcast. So I don't know. I was going to make it silver, but then I've had enough. After spending 2 weeks having my head buried in writing that market outlook, which I reckon 3 years ago, without the assistance of AI, I would have had to have started in August to finish that market outlook. But so 43 pages or something. But yeah, so I'm a bit sick of Canva, so apologies. I would have gone the extra mile and made that silver, but up at 11.2%. I kind of now know how JT felt last year when gold was just rallying and it just never came up. Why would you get out? And while I was just sitting off to the side steaming, going, why won't you rally? So, I mean, gold's still going up. I mean, I think one thing that the gold and silver is doing, though, is very much hiding the rally, the sneaky rally that's happening in copper.
Oh, absolutely. And have a look at lithium
no one's
as well.
talking about it. Yeah, well, lithium, yeah. But, I mean, copper's at record highs. And really, apart from that tariff announcement but in the US where it got to nearly $6, but it was there for like a day. It's really record highs in the US as well as LME, and it's having a very similar structural shortage or deficit problem that silver's having. So, and I think I went on the COB 3 weeks ago and upped our target to 70 on silver, and I think it was 50 at the time, and it's already at 65. So I might have to up that target again.
Yeah, and it's just it's what we've kind of been saying all along is that if and we've seen at the start of this shift is that if people are looking for hard assets now or real assets, the market is actually quite small still. You look at what's Nvidia now, like a $5 trillion or is it $6 trillion? I forget the multiple, but it's
it's 4 point something.
Okay, so it's $4 trillion. Like the gold and silver markets in the billions. Like it's not it just shows that like if the market does rotate to it, and you say compare the bond market to the precious metals market, it is tiny. So there could still be plenty more upside from here. And like people are talking about $100 silver now. And I did see that there's still more and more deliveries being asked for physical from Comex as well. So yeah, like the December contract expires, I believe, on the 28th, or I think it's always the third day before the end of the month. So yeah, like thin markets. Like,
Yeah.
Can you imagine if someone's asking for a delivery on the 27th? Like,
Yeah,
no
no,
one's going to be there. And then
yeah.
like they'll be
Oh,
like, no one else trading
you got
it.
some pimply-haired kid going, "We've just been delivered."
Yeah.
Oh, sorry, we've got to
Someone wants
deliver.
their silver.
Yeah, someone who doesn't understand what a second notice day is or whatever. But I just while you were chatting about that, I went back and this is an old graphic. So Nvidia versus the global sectors. This is from last year, right? So and Nvidia was only 2.8 trillion then. It's put on another. It's nearly doubled since this point. Like that's how old this is. That's the old logo.
Oh, that's the old logo.
Yeah,
The MP,
this is how old
those
it is.
MP guys.
Yeah, those MP guys. So I almost feel like I feel a bit bad putting this up now. But look how big that is, and I'll have to do an updated version of this. But look how big that is compared to entire global healthcare is only 1.7, and healthcare's had a horrible year this year, so it's probably still 1.7. I don't think the materials sector even makes a mention. Yeah, I don't think it's even in there. So yeah, global automakers, I mean, professional. It is just enormous. I'll have to do an updated version of that, definitely with the new logo, and because I'm pretty sure that it's definitely. I can't even look at that anymore.
And just on that, hasn't Nvidia changed their logo as well? I think that's an older logo as well. So
No,
yeah.
no, I think it's the same one. I mean,
Okay.
look, to be honest, I don't think it's any different.
Okay.
Yeah, but like I say,
Well-
I'll have to do an updated version of that because I'm sure it's like it's actually a lot worse than that now. And we were standing there at the time going, "Oh my God, this can't go on." And boy did it.
And it certainly has.
So yeah, we're 2025. This is a bit of a teaser for. So index leaderboard. I didn't bother with the Asian indices and the European because I don't really care about them. Very different kettles of fish, etc. So we'll just focus on the stuff that we watch on a regular basis. So the Russell went up to second place this morning. So I did this a couple of days ago. Nasdaq up 22, which is mainly your tech. I mean S&P, which is mainly tech now as well. And then the Russell, but you can sort of see, you can kind of see how the Aussie tends to track the Russell, and then the Russell's gone, yeah. I mean, it could be the rate differential or whatever, and we're like this says a couple of days ago, we're down 5% for the year.
Yeah.
So as of the 2nd of January.
Yes, and just to be fair, I'm pretty sure that doesn't include dividends. So like you've got to add maybe 3 or 4% to that as well. So yeah, because we're
either way,
we're dividend heavy, but yeah, I understand.
Australia
lags the US again, basically.
Oh, but very much. I kind of get the Nasdaq, but this recent rally in the Russell and things is just so. I think that's where the opportunity potentially lies. Or these come back and our market doesn't fall away, as much. But
no, what I've learned is that if the US falls, we'll somehow match that performance on the downside.
That was incorrect here in April. So we survived a lot better for about 3 months, as you can kind of see here. But look, I mean, the Russell lagged the most, but I suppose the banks particularly, and the fact that the material sector here was already absolutely poleaxed from the previous year, probably very much helped that. I'm sure if you looked at the candle though, it definitely went as hard. But there's a 1.2 trillion or 1.25 trillion in leverage in these ones as well, which is not the case in Australia.
That's right. I forgot about that.
That's retail margin lending. That's not even leverage. from everyone else. So, yeah, no, what the market gods giveth, the market gods can taketh away very quickly, in the form of that devil called the margin call. But that was just a bit of context overall. And then commodities as well. So this was more. I did this for the morning report.
Jesus,
So I
didn't realize how far behind Team Gold was. Jeez, like we're 50% behind. Like, wow.
Ironically, you're a bronze medalist.
You've lapped us basically.
Just about. Well, I mean, that is from 2 days ago, so there is half a chance it nearly has. But I think what sticks out for me here is this one is copper. Like, that's a big, big year for copper. Like, I mean, it's a big year for silver as well, but like, I mean, in terms of if we're going to be realistic about our investment opportunities, I mean, we can muck around in the small caps, we can have physical silver, but like, BHP and Rio, like our index is all about copper and iron ore, our materials index, and gold. But look, I mean, copper rarely. I wouldn't imagine that copper's done that for years and years and years and years, decades. And I think these are, silver particularly, and probably copper. I mean, probably copper as well. But I think copper can do that again next year, personally, because I think there's just underlying demand. And the more I looked into that had my head down in that outlook was that that infrastructure. You've always been able to get copper, but there wasn't much money in it, and now we've had 15 years of no one opening a copper mine, and now everyone's starting to scramble pretty hard, but it won't be solved. Like, they're finding deposits, but it won't be solved anytime soon, and I think that's where Newmont's gone quite well as well. Is that it's got a fair bit of silver and a fair bit of copper as well as gold. I mean, it pales in comparison, but BHP's got a lot of silver. BHP's got a lot of copper. There's every chance that if copper stays up here and continues to rally, like next year, one of the earnings reports next year, copper will be more revenue than iron ore for BHP for probably the first time ever, maybe.
Yeah, and one that we probably missed, and I should have put my hand up and mentioned it, was South 32. So they're actually one of the biggest silver producers on the board as well. So have a look at that.
The problem with South 32 is that
they've got a lot of other legacy mines as well. Like,
they're like the mongrel of they're a bitzer. Like, they've got every
they're the rescue dog, basically.
Exactly. Then like the one that can bite you because it's been beaten up so many times. But there's the thing with South 32 is that every time you go, it should go up. Like, there's some like disaster with manganese or vanadium or like these ridiculously niche metals. Like, it's like your fingers crossed going, they're the biggest whatever producer, and then you realise that silver buggers it up for you, or something else. Like, being that really diversified thing means that, I mean, it'll probably be, if we get a broad rally, I think you'll find all of the single commodity ones go, like the pure plays, and then when they start to get expensive, South 32 is probably by then. Into an earnings, because I don't think anyone's going to buy them until they actually show that result. They don't seem to pick up the themes like the rest of the market does, because they're a bit of everything. But I mean, it doesn't say they're bad operators, but it's such a frustrating stock to follow, because you go, well, you've got that, and it's rallied 115%, and it's like, because we've got a problem in our bloody, our vanadium mine in the middle of nowhere, and they've had to release bad news on a quarterly. It's like, I mean, this job's hard enough without picking the underlying right, and then not rallying. So, but oil and coal being the disappointing ones this year. Iron ore's probably done well to go flat. the the AFR will be Financial Review in Australia will be heavily disappointed in that, because every time it drops 2%, no matter whether it's at recent highs or not, they love running a story about how iron ore is been smashed, and I think they hate iron ore more than they hate Richard White, but or poor old Oleg Vornik from Drone Shield. They really do love to hate people.
But just to switch topics, we had a good laugh at USA took that oil tanker off Venezuela.
Oh yes.
And someone asked, "Well, what are we going to do with this oil?" And we were like, "Yeah."
Trump just turned around and goes, "Well, we'll keep it."
Well, we're just going to keep it, aren't we?
As if he was going to say anything else. What are you going to do with the sailors? Like, well, probably the same thing you did with Osama bin Laden, just overboard.
Yeah, but I don't know if you had a chat about this theory, but the conspiracy theory guys. So the story, as I said, and I say story because it's not really factually based, but the story goes is that the shale oil revolution is starting to teeter out. Look, obviously the cost of getting that very light oil out of the ground from fracking is taking its toll. Like it's been capital heavy so far. And what happened was USA had pretty much zero interest rates, so there was free money. So they actually could just start, start fracking and not trying to make any money. But then now, because it's a mature industry and the investors actually want a return on capital, they're like, oh, well, look, these oil fields aren't profitable at $60. I think they need $75 oil. So USA, what's just happens to be there on the other side of the Gulf of Mexico? Oh, Venezuela, with some of the largest oil reserves in the world. I think they're second to Saudi.
No, I'm going to have to stop. I'm going to have to stop you there. Isn't it the largest gang problem in the world?
Oh, that's right.
That's why Trump's got naval ships parked outside Venezuela. Is they've got a gang problem. It's nothing to do with the oil.
People smugglers, they're criminals. And they must be stopped, basically.
Oh, and oh my God, I can't believe they've got oil.
Exactly right.
It's like if we hear next year that whoever's running Venezuela may have weapons of mass destruction, I'm out. I'm done. I'm just like, we'll because that songbook has been. It's like a Neil Diamond album. It's been played and played and played more than anyone cares to remember. But I think coal and oil particularly, it just needs China. And China's putting down. I saw a picture of one of these Chinese solar things the other day, and it'd still be in the planning phase in Australia. It was literally as far as the eye could see, and I'm like, surely that's AI generated. And I snipped the thing and I checked I got it verified on Google Images, and I'm like, no way. So, I mean, these things just go forever, and then I think that's where that lithium and critical minerals thing is going to probably play out, because they're starting to do battery farms. I was speaking to one of our clients recently in Cootamundra, and shout out to Jeremy Taylor if he's listening. But there's going to be a solar and a battery farm outside of Cootamundra that's been approved by local councils.
Okay.
And which I jokingly said, you're not talking about battery chickens, and it's.
It's all about free range and organic these days.
Well, but it's a massive infrastructure project that's sort of in, I suppose, central New South Wales, and it'll be lithium. They'll basically be lithium batteries. It'll be so, and that's like those mega batteries that Elon's trying to do for data centers. So I think that demand will start to head higher again. So 2026 could be the year of a bunch of really useless miners who were lithium miners, then changed to some other niche metal to try and do a cap raise. they might all switch back again.
Well, the thing is, like, so just on that, like, we obviously look at the top three in terms of Pilbara, Liontown, and Min. But yeah, there are a lot of the names that have a look at Core Lithium, Elva, which we used to be. Oh, I forget the name of the lithium company. But yeah,
I used to know all.
Some of the ones with the mothballed mines, their stock prices have in some cases tripled in the last few weeks. So yeah, the next lithium boom might be on. It's amazing.
Lithium boom, or the sixth, or the seventh.
Yeah, exactly right. Like it's probably the fourth one. Well, it depends on which stocks you follow, but yeah, there's definitely been booms and busts in that space, and looks like there's another boom coming along.
I think that was one thing that I really took out of researching over the last month. Is like you got to have it's got to be refining as well. If you like those ones are the ones that are most vulnerable, that are just we've found some lithium. Well, unless you're vertically integrated, I think people are going to have too much PTSD, for it to be a long-term trend. You're going to have that downstream. But I would expect, particularly coal and oil, will be based. It'll be Chinese economic recovery based, and then and who knows for the rest of them. I think I'd be surprised. I think copper might top that list next year, but it could be silver, it could be platinum. I probably don't reckon it's gold. I think what is it? I don't know what the 2-year rally or 3-year rally is in gold, but it'll probably, I would imagine, stabilise, which is good for the gold miners, and they'll make a lot of money. But I think they're still a bit cheap, but who knows? There'll be a bit of focus on it this year because Trump came in. Apparently, the Europeans had done a handshake deal with a South American country, and I don't know whether it might have been Chile, but I can't remember specifically, for a rare earths mine, and the US apparently sent people down. They were going to close the deal, the Europeans, and they were flying their envoy over, and they got a phone call, and the whole thing got cancelled. So the US sent an envoy over with a much larger bag of cash and said, "Take it right. Here's an extra X amount. Take it now, or we're out." Mm-hmm. And they've just gone done. And then the Europeans are like, and then didn't tell the Europeans. They just cancelled the thing. They were like, apparently they were up in arms, like it was very undiplomatic, and it's like, well, the old Trumpies, swooping in and undercut it. It's very, he's running the, international trade like a New York real estate deal.
Well, interesting, because just on a side note, Andy and Silver, their operations are in Chile. So, maybe, there you go. Maybe they get taken over soon as well.
I should know that, probably. But the fear and greed, we're back to neutral. Grey's pretty. I think that's a pretty good reflection this week. I've been 2 or 3 weeks in a row where I've actually really struggled to do the morning report because it's just been more of the same since Thanksgiving, really. Mm-hmm. So it's why I'm getting it out at like 9:30 every day instead of like 8:30, 9 o'clock, because I'm like, I can't just like nothing's really happened. There's no earnings. Trump's been a bit quiet for him. So yeah, it's been a bit bland, but.
So with that, I mean, what I'm surprised is that the market is at new highs technically, and we're only neutral. So this thing could keep grinding higher because we're not in extreme greed mode at the moment. So interesting. I mean, we are in Christmas, so I thought maybe people would be a little bit more festive and expecting a Santa rally, and to be only neutral in terms of sentiment seems a little bit off to me. But here we are. But you got to remember, it's an aggregate of these things, mm-hmm. like stock price strength and breadth, and stuff like that. Like and vol, like they're not really, they're recovering from that pullback a few weeks ago. Still, I mean, this thing doesn't just turn on a dime. Oh no, it can. It does. we've seen it go to extreme fear quite quickly. So
Oh, but I'm just, on a significant move, but we haven't really had a move from like a significant daily move to the downside or upside for quite a while, to be honest.
Well, especially on the XJO, it's just been stuck around. Well, it actually got to 8,700 this afternoon, but it's been trading around 8,600 for so long.
The midday sell-off. We rally in the morning and get you can set your watch by it. It's lunchtime. The ASX has peaked. But yeah, we got our rate cut despite the fact that they said no more are coming, or it's going to be a much higher bar, which is Powell's way of saying there's no more coming. But he won't be there if they do.
So with that, Mark, are you bullish or bearish for next week? It's.
I've got to say, out of what have we done, 50 odd episodes this year, this is the least I've cared or had any emotion about this. Like I don't see anything pushing it either way. It is a flip of a coin. I'm a 0-star neutral. Because it could be one stock that makes the difference next week.
So you're a low conviction neutral. Like you don't even have conviction about the neutrality.
Oh yeah, no. One thing I do know, I'm a 7-star bull on silver, but it is. God, I'm having to. It's the first day I've gone. Oh, should we maybe trim some? But usually there's a few days to go. The Twitter sphere is the best indicator. Forget your technicals on silver. As soon as Twitter's going, this thing's going. As soon as you see people to $300, that's when you got to trim because there's a 15% pullback coming immediately. But it's been quite sneaky. But I reckon I'm bullish the ASX, I'm neutral to negative on the US. I think that gap closes next week. So I know that's not an answer, but I'm gonna bearish. Fine.
Okay, bearish. I'm gonna go with bullish. S&P new highs. I think Santa's coming. I don't think it's going to be a massive rally, but I think we just drift higher into the end of the year.
He's only got 2 reindeers, not 10.
Yeah, exactly. So it's a 1-star Santa rally.
A 1-star Santa. Like I said, I think the ASX is good. If the investors wake up to themselves, I think we're cheap. But I wouldn't say that be rushing out to buy the US at this stage. But yes, now market outlook. I've spent a lot of time on this, so you should read it. But I'm going to do a webinar on the 15th of January as well, which you can register for. It's all over our socials, but you can go to mpcmarkets.com.au/mpc-markets-2026-outlook. You get it exclusively through Mosaic, and we, as our Christmas gift to you, we're giving you away the Platinum with all the recommendations across all 4 recommendation services, which just quietly have smashed the index this year. And you'll get this, and you'll get access to the webinar and the whole works. It's really easy to sign up. If you don't want the stock recommendations, you just want the outlook. There is also another button on that website where you can just sign up without a credit card or anything like that. You don't get charged. Cancel anytime. It's pretty good value. And get our new platform that our in-house genius, Mr. Chen, has built for us, which is actually aimed at you guys, the customers and the investors, not at the brokers like 24 and Net Wealth. We were pretty accurate last year, and it's been a decent year. And I've got to say, I probably put in a fair bit more work this time than last time. But don't shirk at the 40 odd pages. There's a lot of good infographics in there, as everyone knows. I love my infographics. There's 5 main themes, and then we will give away a few of the stock picks. You get the stock picks on Mosaic in the coming weeks. Once I get around to writing those, if I can stand bang on Canva for another 8 hours, and I've written there are, I think there's 35 top picks in the 5 themes. So just so it's actually actionable rather than just, I reckon this is going to do this. Well, we've actually, I've tracked them all, and you can get all of those picks as well as an added bonus. So that'll pretty much set you up for the year. And that's our gift to you. So I think we'll wrap it up, and I suppose we'll speak next week.
Yeah, absolutely. Well, thanks for listening in, and catch you next week for the final show of 2025.
Yes, number 99, and I don't know whether anyone noticed, but your little fib about Kai being on the boat was dispersed when he walked through the door behind me before. But anyway, we'll have to run with another story next week. But
that's it.
Have a great weekend, everyone, and we'll speak again soon. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.